Good morning, everyone, and thank you for choosing Market Briefing, market analysis, and financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, August 30, 2023. European bond markets saw a dip today as fresh data from Germany surprised investors, suggesting that inflation might not be retreating as quickly as expected in the Eurozone. Germany's 10-year yield jumped up to 5 basis points to reach 2.56% following the release of consumer price index figures for North Rhine-Westphalia in August. Subsequent reports revealed an acceleration in prices in 2 additional German states, while 2 others experienced some easing in inflation pressures. The unexpected surge in German inflation wasn't limited to Germany alone. Spanish inflation also increased. As a result, the Stoxx Europe 600 showed limited movement. This unexpected inflation data from Germany and Spain poses a challenge for European policymakers, especially following soft jobs and consumer confidence data from the United States earlier this week, which led some to believe that the Federal Reserve might be nearing the conclusion of its current tightening cycle. Notably, North Rhine-Westphalia is often seen as a bellwether for German inflation trends, potentially foreshadowing the overall figure to be released by the German Statistics Office later today. Across the Atlantic, U.S. equity futures remained flat today, following a significant surge in the S&P 500 on Tuesday, triggered by economic data that decreased expectations of a Federal Reserve interest rate hike in 2023. Traders also adjusted their bets, bringing forward expectations for rate cuts from July 2024 to June 2024. Concurrently, Treasury yields saw a slight uptick, while the dollar remained steady. Market analysts are closely watching this shifting sentiment. Jim Reed, a strategist at Deutsche Bank AG, noted that markets have swung from narrative to narrative, with a soft landing one winning out handsomely yesterday, or as a minimum the narrative that the Fed is more likely than not to be done hiking. Looking ahead, investors will closely monitor U.S. economic growth data due later today, providing further insight into the resilience of the U.S. economy amid high interest rates. Additionally, Eurozone consumer confidence figures are on the docket, contributing to the market's overall sentiment gauge. In Asia, the MSCI Asia Pacific Index initially rallied but later retreated from its highs. The Hang Seng Index in Hong Kong saw a notable rise, climbing as much as 1.4%, largely attributed to reports that Chinese state-owned lenders were preparing to reduce rates on outstanding mortgages and deposits. However, Dwight Evans, head of APAC macro strategy at State Street Global Markets, cautioned that while these policy shifts might boost short-term sentiment, they might not necessarily spur significant local economic growth, highlighting deeper underlying issues that continue to weigh on investor sentiment. In Australia, stocks continued to outperform the region, benefiting from a monthly inflation gauge that eased more than expected, strengthening the case for the central bank to prolong its pause in tightening at the upcoming policy meeting. Shifting focus to the cryptocurrency market, it experienced a decline after Bitcoin's impressive 6% jump in the previous session, which followed a U.S. court ruling that potentially opened the door for the country's first Bitcoin exchange-traded fund. In the commodities arena, West Texas Intermediate crude oil marked its 5th consecutive day of gains, matching a winning streak last seen in March, driven by signs of a tightening oil market. Meanwhile, gold held steady after reaching its highest point since early August, supported by reduced expectations of aggressive Fed rate hikes. The U.S. dollar, which suffered significant losses against major currencies on Tuesday, managed to regain some ground early on Wednesday. This comes after the U.S. Bureau of Labor Statistics reported a decline in job openings for July, leading to a more than 2% drop in the benchmark 10-year U.S. Treasury bond yield and contributing to the previous day's dollar weakness. As of now, the U.S. dollar index is holding small daily gains slightly above 103.50, with the 10-year U.S. yield remaining in positive territory above 4.1%. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Here's a quick look at the percentage change of the US dollar, USD, against other major currencies today. USD was the strongest against the New Zealand dollar, gaining 0.44%. Euro was down 0.10% against USD. GBP declined by 0.09% against USD. CAD edged down by 0.10% against USD. AUD slipped by 0.29% against USD. JPY fell by 0.33% against USD. NZD saw a decrease of 0.44% against USD. CHF was down by 0.09% against USD. Market participants will be closely monitoring Germany's Consumer Price Index, CPI, figures scheduled for release later today. This data will provide crucial insights into inflationary pressures in the Eurozone's largest economy. The previous day's disappointing U.S. job openings data had a ripple effect on global markets, including a decline in the U.S. dollar's value, underscoring the importance of today's German inflation figures. The U.S. economic docket for today features several significant releases. August ADP employment change. This report will shed light on the state of the U.S. job market. July goods trade balance. The trade balance data will provide insights into the country's trade dynamics. Gross domestic product, GDP, for the second quarter. This GDP data will give a snapshot of the U.S. economy's performance in the past quarter. In the Asian session, Australia reported that its annual Consumer Price Index, CPI, rose by 4.9% in July. This was a notable decline from the 5.4% increase recorded in June and below market expectations of 5.2%. The softer inflation data had an impact on the Australian dollar to US dollar, which lost 0.3% on the day at 0.6460. After reaching its highest level since November above 147.00 on Tuesday, US dollar to Japanese yen experienced a sharp reversal in the American session, closing the day below 146.00. Bank of Japan, BOJ board member Naoki Tamura commented on the need for an exit from easy policy, but the pair remained positive, hovering near 146.50 in the European session. Euro to US dollar gained over 50 pips on Tuesday but fell short of testing 1.0900. It is currently consolidating its weekly gains slightly above 1.0850. Pound sterling to US dollar closed positively for the second consecutive day on Tuesday, benefiting from USD weakness and improved risk sentiment. The pair is holding steady above 1.2600 midweek. Gold prices surged on Tuesday, reaching their highest level in 3 weeks, nearing $1,940. However, with the 10-year U.S. yield retracing some of its weekly gains on Wednesday, gold ounce per U.S. dollar is trading modestly lower at around $1,935. Bitcoin and Ethereum displayed bullish momentum, with Bitcoin climbing above $27,000 and Ethereum gaining nearly 5% to stabilize above $1,700. These cryptocurrencies continue to be closely watched for their price movements in the broader cryptocurrency market. In conclusion, we'd like to thank you for watching Market Briefing, market analysis and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.